Good morning, good afternoon, good evening. It's August 10, Thursday, 5:55 p.m. And welcome to our latest episode. We have made it to another week, believe it or not, Wowie.
Hmm. We're
Yeah,
in August.
August, yes. Another consecutive recording for the second week in a row. This is Mark Yu,
Wawi Santos is here.
and this is episode 84, Losing Altitude at Mark Yu and Wowie Show. So why losing an altitude? We'll take a look at the fund flows in the stock market, see if it's been affecting our long-term conviction. Maybe it's a good time to buy finally, or maybe it's not. Altogether, we're going to take a look at it on today's episode. Just a reminder, we're not registered financial planners or analysts, so don't consider what we talk about here as investment advice. So on we go. So today we're going to look at the sentiments, fund flows, where the money is going, what sectors are improving or declining compared to a week prior, some of the highlights as pointed by Huawei and shared in the group, our messenger group, regarding CPI, some mortgage rates to be discussed, the state of the US housing market provided by Redfin. Of course, we're going to take a look at the best big tech, Apple, Amazon, how they're doing in terms of their recent performance. Looks like some of the business newspapers have been highlighting how some of the big tech that has carried the stock market since the start of the year have pierced through moving average, uh, a definite moving average indicator. So one by one, we're going to take a look at the big caps as well as the index itself, the S&P 500, and maybe Nasdaq if we have enough time. And how about we also take a look at the freight sector, the ones who actually carries the whole nationwide market, or whether it's selling goods and materials or even commodities such as oil. So we're just gonna take a look at UPS, FedEx, and one of the smaller companies, Expeditors International, as we may have known, just a week ago, or even, no, it's just Monday, when one of the oldest 99-year-old truck freight filed for bankruptcy, which is Yellow. So, okay, on we go. First is the AAII sentiment survey. Once a week, they poll their investors here in the US every Thursday. Uh, until Wednesday, and then they publish it once a week, see if the investors are bullish or bearish or neutral for the stock market. For as of yesterday, there were a lot less bullish investors. From 49% last week, we're down to 44.7. And there have been a little bit more bearish, from 21.3 to 25.5. Neutral investors has stayed the same, about 29.8. So a little bit bearish sentiment. Wowie, what do you think of this?
Well, it always starts bullish in the morning when I'm looking at the stock market day by day, and then they start selling off by midday. So a lot of profit taking. People are just not they're just raking in for the short haul. There's no long term commitment for most investors.
Mm,
I think they're just waiting for the Fed to pause again uh, for them to make longer term decisions.
right. In terms of the Fed rate hike, so a lot of people are thinking that the Fed might actually stop hiking rates, but there's no guarantee to that. As you know, a Federal Reserve Chairman Jerome Powell has been at least transparent in terms of the plans. So it's going to be another 40 days until the next federal um, FOMC meeting. But wow, 89%. Remember, as of today, August 10th, it had 89% of the a lot of what do you call this? The probability of the experts or professionals, 89% of them think that the Federal Reserve would do nothing on the Federal Reserve meeting in terms of hiking rates or not. They're gonna stay put as of today for the outlook on September 20th. Only 11% sees that there might be a rate hike. So this is a further increase in terms of thinking that the Fed won't do anything compared to a month ago. A month ago there were only 72% thinking, but right now it's 89%. So a lot of people are thinking that the Fed is done hiking rates. So we'll see. Meanwhile, okay, fund flows. Looks like this is a repeat of an article from last week, but I double checked. Yes, this is published today, August 10th, that money market again climbed to a record. Assets have climbed to a record high with rates above 5%. So if you park your money at the money markets, if you open a brokerage account and you haven't bought a stock, your money is sitting there, you can actually earn a little bit of interest. Right now, money markets or money sitting at the sidelines, ready to be, deployed for investments, but chose rather not to be by their investors, are now hovering at $5.53 trillion. This is the highest that we have ever been in history. New all-time high. A lot of dry powder sitting on the sidelines, afraid of it being invested at this point in time. Do you keep dry powder, Wowie? What do you think? Do you put some money in the money markets too?
Well, my reserves keep drying up. I keep buying, Mark. Uh, as soon as I see something that's I think it's a good price to buy, I went ahead and buy. My goal was to have more dry powder, but I'm seeing a lot of bargains, so I've been buying.
Mhm. Are you seeing bargains in tech or just basically?
Not a lot of tech. The first and second quarter, I was heavy on the financials, but right now I'm buying more of materials, and utilities are down, so I'm buying some utilities today.
Hmm.
So, and today I bought a company called NRGV. It's just a energy storage company, and one of their storage uh, uh, technology is using concrete blocks. Uh, when when the photovoltaic cells are not making enough energy, then the blocks will come down, run the turbines for them. I
Oh,
read that they are building some of this in Arizona. So, and we know the utility prices there will be going up because of the increasing climate temperature.
hmm.
So I'm just pricing in what I was telling the group. I'm pricing in some of the um, climate risk.
Yep.
So I'm also putting in some money on insurance companies.
Yeah. Energy Vault is quite down from its peak at $10. Well, its peak was around $18 back in April.
Hmm.
In
So I think
April.
it was relatively cheap today. That's why I got into it.
Yeah. Well, as long as they have more cash than that, for sure, and it makes money, I think that's
Hmm.
good company. So, Fear and Greed Index provided by CNN here. The greed is we are in greed territory, 68, whereas a week ago we were at 74. So a little bit of a dip there. And if we're gonna take a look at the timeline, if we could go there, we have been actually slowly going down on a trend line from a peak of 81 back in July 17. And now we are at 60, 68, 67. So that's quite a few points. So you can tell there's some form of fear happening right now. And the market momentum, S&P 500 and its 125-day moving average, which we've been monitoring, this kind of like actually is a good way of tracking for me the where the market is headed. As me and Wawi have been using this kind of like momentum chart since last year. Right now we have basically kind of like reached a peak somewhere in July 31st probably, and we
Mm-hmm.
have been trending lower and lower. So it's been lower highs. It's not been higher highs since that point. So maybe a reversal at this point, but we are still ways off of the 125-day moving average. So if we do pierce through this 125, that's kind of a worrying sign, I believe.
Mm-hmm.
But right now we are ways from it. We are actually 200 points away. So unless a lot of banks file for bankruptcy, like what happened mid-March, that's when the S&P 500 briefly breached through. March, you could tell March 10th, but right after the Fed allowed the banks to get some money and trade their commercial papers at par value with the Federal Reserve, the S&P 500 notices that free money again and turned around and went back up to the uh positive side of the graph. So right now, maybe like what Wowie said, people are taking profits at this point in time, which isn't bad. You know, it's not like a tremendous sell-off happening at this point of time. The volume
Mm-hmm.
as well has been trending lower since July 31st. So a little bit less greedy, but still in an extreme greed, according to this graph. The put and call options, interestingly, have been surging. So, like what we identified last week, so from 0.67, not seen for the past year, now we're at 0.86. We're at around May levels, which, was about 3 months ago. So a lot of put buying from investors trying to buy options to protect their portfolio in case of a sell-off. The volatility, so it actually pierced through last week or about 9 days ago. The 50-day moving average, it pierced through, so it's quite a mark for the volatility index. And it has remained higher than the average of at least a couple of months. So a little bit of volatility, as we have noticed in the past couple of weeks. So volatility for the past 5 days is up 3.5%, while the S&P 500 is down 1%. The volatility for the Nasdaq is up 2.2%, while the index is down 2% as well. So quite a reflection there for the past week. Let's see who are the top sectors for the past 5 days. Number one, it's still energy. Wow, energy is
Mm-hmm.
staging a comeback since last week. Wowie, they've been number one sector since last week.
And maybe for the rest of the year, more than likely,
Mhm. Well,
because
right. Yeah.
there should be an increase in demand, for for transportation and heating and cooling for the rest of the year.
Right. Well, right now, yeah, oil. I think gasoline prices you know, at this point in time haven't like let up. They're still high, above $3 in my area, $3.20, if I'm not mistaken.
Mm-hmm.
So energy is up, the best performing sector for the past 5 days. Health followed by healthcare. Healthcare has been worse since the start of the year, but it looks like it's showing a comeback at this point in time, coming into the third quarter. Communication services, which are your Google and Facebook or Meta platform, and consumer cyclical. So energy, healthcare, consumer cyclical, and communication services are the only sectors that are in the green. The worst performing sector for the past 5 days is technology. It's down 3%, followed by basic materials, which is down by negative 0.84%. So I guess a lot of profit taking right now, Awi, like you said, right? In technology.
Mm-hmm. Yeah, a lot of them are overpriced anyway, so it's just getting you that correction territory.
Yep. For the past month, energy is still the top performing. The worst performing for the past month is technology and utilities. So I think people are afraid of buying utilities because of the increasing interest rates and the debt levels that these utilities uh carry on their balance sheet. But they're certainly reliable in generating some cash flow, or else they won't be able to provide their services, electricity and water,
Hmm.
the like.
Hmm.
So yeah, for the past year, it's still communication services and technology that are the best performing sector. Actually, all sectors are in the green except for utilities
Hmm.
since the start of the year.
And that's why I'm starting to get into utilities because of the lower value that they're
Mm,
putting on those sector.
they're being neglected. Nobody is paying attention. So for the fund flows, we're looking at the Reuters publication. It
Hmm.
says here, global money market funds see largest inflow. Well, this is August 4, March amid US downgrade economic woes. So I guess this is the latest report. So like it's like a double take of last week. It's like a recycle.
Hmm. Hmm.
Whereas money market is receiving a lot of fund flows. So let's just look at the equity, well, certain sectors where the money is going. You know what? I think this is not an updated one. I think this is the one that we have discussed last week. Well, if anything, we're just gonna briefly go through it. Fund flows. So a lot of money, 58 billion came into positively to the US stock market. 14 billion flowed into the European stock market, while Asia experienced an outflow of 360 million. So, and for the sectors, investors withdrew nearly half a billion from utilities. So people are still pulling out of utilities despite it being hated since the start of the year. Another 468 million came out of healthcare and 300 million came out of tech sector. Like, realizing some gains. So that's for the fund flows. So Wally, share us what you found for the CPI report. 3.2%, less than expected. Is this good news or bad news?
Well, it's less than what was expected for this month. So it was taken as a good news this morning, but the excitement waned off right away by midday. Um, so everyone's just anticipating what the Fed is going to do. So we might hear more from Jay Powell. I think he's going to a conference, so he'll probably speak more freely when he goes there. Might get more insight, but at least three of the Fed governors have said that they prefer to pause
Mm-hmm.
and see what will happen. So there's a pretty good chance. I like the numbers you showed. What I saw this morning on the likelihood was 20% that they were gonna increase the uh, the rate again at 25 BPS, but you showed 11%, so that's good.
Mm,
So that would be good for the market if they do pause.
true. And if I could read some of the quotations here, it says here, it is not quite mission accomplished yet, but significant progress on the inflation front has been made, according to chief economist at SS Economics. On balance, the inflation picture has improved significantly. The Federal Reserve will stop raising the interest rate soon, according to this guy. So another quote, while it would be fair to describe prices as still relatively high in places such as shelter and used cars, we are witnessing a rate of change that is encouraging to consumers as well as to the Federal Reserve policymakers, according to BlackRock. So aside from that, Wabi, on the article you have shared on the CPI, meeting the expectation at least, or even beating it by a few points. More economists are beginning to expect that the US can avoid a recession despite the aggressive rate hikes. Bank of America, Goldman Sachs, and JP Morgan all recently have forecast that a contraction is becoming less likely. So these are big banks already reversing their call for a recession, so which is interesting because according to them, to the Federal Reserve Bank of New York, we are still seeing relatively high probability of US recession in 12 months. From a peak of 70.85%, we're looking at possible 66% by July 2024. So should we believe this or not? But yeah, looking at some of the interest rates, the favorite 10-year, 2-year spread. So we have been always inverted, and every time it goes inverted, like what's indicated here, well, this is a 10-year 10-year bond and 3-month bill rate. But also the 10-year, 2-year spread. Whenever they go in inversion, we always see a recession in the coming 9 to 12 months, as we have discussed before. So you could tell, like, since at this point here on the CNBC chart, July, what is this? July 21st? No, July 3rd. Interestingly, right, when we have, if you have noticed, just a while ago, we were looking at the sentiments. Well, I can actually go back. So if you go at the sentiments here, we're becoming a chart reader now, I guess. So no
Technical. We're becoming technical now.
no more fundamentals. It's all about charting. So the peak of the S&P 500 when it started going down was around July 31st.
Mhm.
And if we take a look at the 10-year, what do you call this, 10-year, 2-year difference, the inversion happened, the bottom of the inversion happened just a couple of days after that on July 2nd. And since then, slowly but surely, the yield curve started sloping up. In reverse, the S&P 500 starting
Mhm.
to head down quite a bit. So that's pretty interesting. S&P is down about 2.6% since the yield curve has slowly went up. So this is just a little observation, I guess, but nothing to be worried about, I guess. More troublesome
Mhm.
maybe while we if this goes to zero, which everybody would love
Mhm.
to see, but still, the S&P 500 keeps selling off. So that's quite troublesome. But is a back to normal, if this goes to zero back to normal, would hit the stock market pretty bad, or will we still reap some rewards as long-term investors?
Well, so far, they've been raising their prices on their products. Disney has just followed Netflix's, um, subscription program where they're cutting down on the password sharing and increasing their subscription price. So they're just pricing in the inflation and passing it on to consumers. And we're also seeing changes on Well, shelter is still overpriced, so that may take a while for for it to go down.
True.
Um, so, but there's definitely a lot of overvalue in Florida, California, and Texas. So we don't know. We don't know what's gonna happen.
Yeah, meanwhile, on the real estate side of things, the 30-year fixed mortgage rates have climbed to 7.14. Yeah, so that's a pretty hefty interest rate right there at this point
Mm-hmm.
in time. Look at that surge from
Mm-hmm.
3%. You could have bought a house at 3%. Oh my gosh. Right now it's more than double, 7%.
And that's why builders are coming up with their own, mortgage program
Right.
to counteract some of these high mortgage rates.
Mhm. Yeah, the one that we had shared in Facebook, I think it's DR Horton, one of the largest builders. They're putting up 5% fixed rates. Believe it or not, 5%.
Mm-hmm.
That's a pretty
Mm-hmm.
good deal right there. If you can, that would actually, if we're gonna do a mortgage calculator here, which is provided by Google freely, you could already, let's just say a $500,000 home with, right now with a 7.19. So that's $3,300 or $3,400 monthly. But if Lennar or DR Horton does 5%, gives you 5% instead of 7, that would be $2,800 of $500 in difference if you're gonna take that deal with DR Horton, which is a good amount of savings. 500, that's like a monthly
Mm-hmm.
grocery, including some gas too.
Yeah, or car payment.
The car payment already, yeah. So now, if you're gonna look at the housing market overview, so it's been a while since we've taken a look at this. Number of homes, I don't know. We're just gonna take a look at the price. The median sale price right now, it's down negative 0.83 from last year, but it's still at $425,000 to have to buy a house on a median. Median is like 50% of the houses here in the US. So a lot of YouTubers, or the famous ones at least, with huge followers, were saying that the housing prices will collapse this year and it's, don't buy or whatever. But it was back in May when the peak was really high. This was around 400, I think. Well, it doesn't give me any value here. But after that, we have seen the downtrend until January of this year. But looks like it has already bounced again. So this is not what the Federal Reserve want to see, because housing prices have been creeping up again.
Mm-hmm.
So I don't
Well,
know.
it's also seasonal if you think about it.
Oh,
Come
true.
winter time, come winter time, it slows down. That home buying slows down,
Right.
but it also picks up in the spring and summer.
Yes. Well, time will tell if this will again die down, but yeah, it's been climbing up.
There's a lot of demand. They're just waiting
Mm.
for things, to get better, either price wise or interest wise.
Yeah, the top 10 metros to avoid. No, I'm kidding. The top 10 metros with the fastest growing sales price, just in case you guys want to know. Lexington, Fayette, Kentucky, Lexington, Kentucky, Rochester, New York, Little Rock, Arkansas, Columbus, Georgia, Fayetteville,
Wow.
North Carolina, Cincinnati, Ohio, Myrtle Beach, South Carolina, Newport News, Richmond, Virginia. So now we're gonna just dive into, since we have so many minutes left, to the 50-day moving average of the biggest tech companies here in the US. So Apple, they actually breached through the 50-day moving average. So maybe we're gonna follow this closely from time to time, as now we are technical or chart readers. So it pierced through. When was this?
Chart readers.
August 4. about a week ago, and it never recovered since. So this is the biggest company in the world. Well, is it? Yeah, $3 trillion. Nvidia, the high flying chip producer, actually pierced through too as well back on August 9th. And it's trying to come back slowly, but it hasn't quite done so yet. So it's quite a little bit bearish.
Mm-hmm.
Google, meanwhile, is still ways higher than the 50-day moving average. So the Google is surviving. They're not actually piercing through, they're not falling. They're steadily up above the 50-day moving average. Netflix, okay, wow, Netflix is right there at the line. They're just playing. If you're a trader, I don't know how
Mm-hmm.
you plan your trades, but it looks like a steady support at the 50-day right here since July 25th. So careful because the big tech, the Apple itself and Nvidia, the ones who have driven the market all this time, has already pierced through the 50-day moving average, and it looks like Netflix is barely hanging on. Uh, Next is Meta. This company has more than doubled. This is one of my favorites for this year. Definitely an outperformer. It's still ways away from the 50-day, but you can tell since July 28th, it's slowly going to that 50-day moving average, slowly going down, ever so slowly. So it's one thing to keep an eye again. It's going down on that trend line. Amazon. So Amazon is also right there with 50-day moving average as well.
Hmm.
But since August the 3rd, it reported an outstanding earnings report. Surprise, surprise. It popped to 140 bucks a share. But now you can tell it's slowly creeping down as well. It's trying to imitate what Facebook is doing. But yeah, it's 100, it's 50 days, 129 bucks. It's 138. So something must go wrong terribly for it to go down quite a bit.
Well, definitely good, if you're just looking at moving averages, the convergence divergence also would show a possibility of an uptrend on these last three stocks that you mentioned. I was looking up the MACD, they're crossing over, showing a likelihood that they might pop up tomorrow. So day trading is good, is what I'm saying.
Hmm. Definitely
For the
take,
large companies.
it
I
definitely
mean,
takes
for those that are, yeah,
more risk.
yeah, a little bit more risk when you're day trading. But
Yeah.
the charts, the charts tell you, the general trend. And there's a lot of volume on these last three stocks that you mentioned: Meta, Netflix, and what was the last one? Amazon. Yes,
Um,
they all have that crossing divergence that shows it might be strong tomorrow.
we'll see. We'll stay tuned. Last day of the week. The
Yeah,
Hmm.
maybe in the morning. Well, don't take my word, of course. It's just, just the way that you look at the technicals, but you have to check it again in the morning.
Yeah, and the next will be the index itself, the S&P 500. So since this point, wow, everything coincides. Last day of July, S&P 500 has been slowly going down, trying to kiss the 50-day moving average as well. So we see a further down drip before it bounces back. We'll find out. Maybe
Hmm.
I could pull up Nasdaq too if I can. Let me try. Oh, QQQ. QQQ is Nasdaq too, so maybe I could take a look. Ooh, Nasdaq
Hmm.
is right there at the 50-day moving average. Woo. Wow.
Let's look at QQQ. Well, so S&P 500 might go down more, having seen that. Well, I
Hmm.
can't pull up my chart. There's a little slowdown on my data.
But all
So,
right. Well, for now, there's a article here from Air Cargo Next says Expeditors International's net profit fell almost 50% second quarter as air and ocean freight forwarding both fell by more than half. So that's a
Mm-hmm.
little troubling. That's the world economy right there. So let's take a
Mm-hmm.
closer look on UPS. So UPS actually, it's a little tricky to look at UPS filings. Come on. Okay, here we go. 2022, 2023, June 30. So domestic international package, domestic, the revenue, ooh, it dropped. US domestic, nearly 7%. And then international, it did drop as well for UPS, 13%. So its total revenue is down nearly 11%. So that's a slowdown right there worldwide in terms of UPS business or how much it's doing business. Not a good signs. Definitely a slowdown. For FedEx, all right, we have only a minute left. I guess we're gonna rush things out. So for FedEx, let's take a look. Come on, come on. FedEx, I think we're gonna have a hard time looking at FedEx at this point. Oh, there we go. FedEx actually also dropped. The Express 13%, ground 2%, freight down 18%. Everything is down in FedEx as well. I was wanting to see global shipments. There you go. International domestic is international export is down 13%.
Mm-hmm.
US is down 8%. Overall revenue for Federal Express revenue is down 13%. So definitely a slowdown. Well, I guess we have less than 30 seconds remaining. I
Well,
appreciate
that
you joining us today.
yeah, it just reflects what's going on with the world economy. It's a slowdown in China, slowdown in U.S. import export.
All right. Well, I hope you guys stay tuned and like our weekly take. Catch us again next time. Again, this is Mark Yu signing out.
And Wabi Santos signing out.
Bye, guys.